Afternoon. Welcome to another episode of Solar Fuel Live. My name is Jason Shea, founder of Solar Fuel, and today I have a very special interview with founder of AccrueMe, Don. And Don is actually a serious entrepreneur himself. He have a lot of success building multiple company in various industry, from finance, publishing, mortgages, real estate. You name them all. He have created one of the company in a lot of the industry. This is my pleasure to introduce Don, and thank you for having to be a guest on our podcast today.
Thank you, Jason. I appreciate this. This is going to be fun. We're going to have fun today.
Yeah, I think the whole idea is to really introduce some of the alternative financing options in the industry, because I know this is a common struggle with a lot of e-commerce business owners that's looking for fundings as their business growing. The last thing you really want to happen is for your business to run out of cash that you
Yeah,
cannot support and buy the inventory. So can you first kind of start out telling the viewers and the listener a little bit more about yourself?
sure. We could spend the whole time on my career because it's a little crazy. But as you said, I've started many different businesses in different industries. It's pretty common that people will start one business in the same industry and then start another business in the same industry and so forth. But I jumped around. I started a financial planning company, a mortgage company that I sold, a mortgage broker franchise, never been done before. Built that and sold that. A publishing company, sold that. Entertainment company, we sold various movies within that, and the Broadway show Rock of Ages. We did 8 feature-length films with the biggest name stars, and I started it from scratch. I never knew anything about it, just started it. A whole bunch of different industries. One time I got bored and I decided to flip houses. So in I bought and sold 300 houses in 18 months, every
Whoa,
one of
that's
them
a
for a
lot of
profit. Yeah, it was exhausting, but it was fun. It was fun. I learned a lot, but it's not what I wanted to do, so I stopped. And I've just done a whole bunch of different things, and then I retired. I took 5 years off. I wasn't planning on retiring. I just decided, just did. And after 5 years, I was done. I didn't want to get back into it. And then I learned about Amazon and Amazon sellers, and I love helping people grow businesses. And went to bed that night, and I had a dream of standing on a stage with in front of thousands of sellers. And I don't know what I was saying, but I was helping them grow their businesses. And so I knew that this is what I wanted to do. So my partner and old friend of mine, we sat down and decided to start talking about Amazon sellers and learning about it and seeing what they need. And we found that they needed good sources of capital. So we developed a model that's never been done before. I didn't want to be a part of anything that was going to be bad. I wanted to be part of something that would be revolutionary and good for sellers. And the very first seller we did business with, who still works with us, called it, it's the first time there's any capital program out there that's imminently fair. And I love that. And that's the way we tried to do it, is make it fair for the seller.
Yeah, thank you for sharing your story. Speaking like a true entrepreneur here, and and you
Yeah.
definitely start a lot of the businesses. I wonder during that
Yeah.
18 months of flipping 300 houses, did you actually have any sleep during that 18 months?
But I had plenty of sleep. It wasn't that difficult, but it was very
Okay.
interesting because some of them were foreclosures that,
Uh-huh.
before you buy it, you're not allowed to even go in the house. So it's a complete
Oh,
gamble. So
I
what I
see.
learned in the foreclosure world is that you go to a back door,
Yeah.
somehow break into the house.
You break into the house. Okay.
Yeah, you do. And you walk around you with a flashlight and you try to see the lighting and the plumbing, and you have to know what you're getting into. And
Whoa.
sometimes
Okay.
when you do that, you
Uh-huh.
find people living in the house that are not supposed to be there.
Oh, that's
I
some crazy
there's
story there for sure.
there are some
Yeah,
crazy stories. I
yeah.
one house, oh my God, it was horrible. I'm not even going to tell you how bad it was, but
Mhm.
we ended up cleaning it up and doing everything that needed to be done, including getting rid of probably over 1,000 rats in
Oh my God.
their
Oh, that's
backyard.
crazy.
Yeah, we needed bulldozers to get in there, the whole bit, but we
Mhm.
fixed the house, we cleaned it up, and eventually we sold it in mint condition and made a lot of money. But
Yeah,
it's
that's definitely a whole different world.
whew, we went
Yeah,
into that house and we thought the
yeah.
walls were gray. They weren't gray.
Mhm.
They were fleas. The walls were
Oh my
covered with
God.
fleas. Yeah, that's how
Oh
bad.
my God, that's
Yeah,
crazy.
yeah, yeah.
Oh,
That's a whole nother
wow.
story. That could be a whole episode.
Yeah, for sure. So, my next question is, since you started it, AccrueMe, in a nutshell, can you tell the listener and the viewer a little bit more about like what exactly is
Sure.
the offering that you guys have?
Well, everybody knows what lending is, right? It's been done for
Mhm,
2,000 years. So if you're going to start
mhm,
something to provide Amazon sellers with capital, you would probably lend them the money and,
mhm,
make an interest rate and have a term and a monthly payment. And we said, I don't want to do it that way. I want to do it right for the seller. And literally, I looked at it as if I was sitting on this side of the table as the seller. What would I want? And so here's what we came up with, and it was a wish list, and we figured out how to do it. So we'll give them the money to grow. We don't charge any interest, no fees, no penalties. All right. We don't have a
mhm,
term. They use the money for as long as they want or as short as they want. They don't have to tell us. If they called us tomorrow and said, I want to pay you off, they pay us off. We're done. That's it. It's nothing.
mhm,
And we don't require monthly payments. So, and people think that sounds crazy, but it really makes sense. So, if you're a seller and you're growing your business, does it make any sense to take cash out of your business when you have an opportunity to grow and send it to me? It makes no sense. If let's say I'm in wholesale, just to use that as a simple example, and I have an opportunity to buy product right now at a 40% discount, and it's going to
mhm,
sell in the next 2 weeks. But
mhm.
instead of buying that product and making money, I have to take the money out of my business and send it to a lender. That's just terrible. So we tell the sellers, don't pay us when you have opportunities to grow. Pay us when you're slow, when you have plenty of cash in the bank. That's when you should make a payment. And we don't force them to make payments. We just tell them when it makes sense for them, and then they have to make decisions. We have some sellers that are looking to sell and exit the business, and they haven't made a payment in over 2 years, but
Hmm.
they're
Yeah.
growing like this. They're growing like leaps and bounds. And when they exit, we'll get our investment back plus whatever accrued profits we earned, and they keep all the upside. They own 100% of the company. We get no equity in the company.
Mhm,
So that's what we did. And what we get out of it is we get a percentage of profits. And at a high level, the way we set it up was, again, how can we set this up so that the seller can only win? So here's what we did. In the end, the way at a high level, it's not the details, but at a high level, the seller earns 100% of the profits on their money.
mhm.
Plus, they get half the profits on our money.
Yeah.
They
So
can't lose.
yeah, essentially that lead to kind of my next question, which is more like a clarification questions. Sounds like to me you have a very interesting vehicle for the seller to consider, which you don't charge them any interest, and there's no processing fee, and you only pay when you can. And but on your side, how do you keep AccrueMe afloat when you're not
Yeah,
charging those like traditional fee like the typical financial institute like a bank would
right.
charge?
Well, we earn a percentage of profits, right? So, and that percentage of profits, instead of us taking that payment out every month, we leave it in the business, so it will accrue. So let's say we gave you $20,000, and our portion of the profits are $1,000,
Hmm.
and you wanted to leave us to leave that money in. We'll leave it in. Then it's like the next month as if we invested $21,000. So that's what we do. But think about it. Almost every seller has a number of months, maybe 3 or 6 months, where they're not as busy as they could be. Like if in
Yeah.
Q4 they're going to be very, very busy. But most
Hmm.
sellers, by the time it's February, March, April, May, they've slowed down. And what
Hmm.
happens when they're slowing down? They don't need as much inventory. They have cash in the bank, and by paying us, our profit percentage comes down. So it's in their best interest to make a payment, and it's good for us. So we don't get payments every month, and we don't get payments every quarter necessarily, but most sellers pay us some months per year.
So
And
does the seller get to choose the pay, like the repayment frequency based on the way they want to pay back, or?
there is no repayment frequency. They pay whenever they want to pay, whenever it's right for them. So
Okay.
if you have a business and you have the opportunity to grow, you're not going to make a monthly payment. It makes no sense. But
Hmm,
when you're slow and you have cash in the bank, then it makes sense to make payments, and you should.
I see. Okay,
Yeah, yeah.
I see. I see.
It's good for us and it's good for the seller. Everybody wins.
So that lead to my next question. What is the requirement for a business that's looking for additional capital to be qualified for what AccrueMe offer?
Sure. I'm just going to go back for 1 second and just give you
Sure,
one
sure.
more thought that I think people uh, will enjoy or at least learn something from. So there's a calculation. What does the payment cost you? So
Mhm,
as a seller, let's say you borrowed $100,000 from Amazon and your monthly payment is $12,000.
mhm,
What does that cost you in your business? Does it cost you just $12,000? Or does it cost you something more? So here's the way to think about a payment.
mhm,
Think about your ROI, your monthly ROI. Let's just say it's 10%, just to be simple. If you take your monthly payment and multiply it by your ROI, your monthly ROI, that product will be the amount of profit you will lose by making that payment. So if you're making a payment of $12,000 and you have a 10% ROI, so 10% of 12,000 is 1,200. You would have earned $1,200 on that 12,000 if you kept it in the business. But now you
mhm,
didn't just take 12,000 out of your business. You took $1,200 a month of profit every month going forward that you just lost. And next month you make another payment of 12,000. That means now you're losing $2,400 a month in profit and so forth. And that goes on. That's what payments do. It costs your business not just the cash, but it reduces your profit significantly. So I hope that helps. What is it qualifying for AccrueMe? We make it pretty simple. It's 6 months in business. You have to be profitable. We're looking at Amazon sellers that are selling on Amazon.com right now, but the seller can be located anywhere in the world, doesn't matter.
mhm,
But we're only providing money for Amazon.com right now.
mhm,
And the minimum that we give is $10,000. We're
mhm,
looking to increase that to $25,000 because too many people want the 10,000 and such. So we have to up it a little bit. But that's
mhm,
it. We make it very simple. We have a very simple approval process. We're not looking at
mhm,
credit reports. We're not looking at bank statements. We're not looking at financial statements. All we look at is your inventory. So we
mhm,
look at your inventory on Seller Central. We pull it down. We ask you for your cost per unit, and
mhm,
then we can see if the products are profitable. And we built technology that analyzes all of your inventory in a matter of a minute and
mhm,
tells us which ones are good and which ones are bad, which ones are turning over fast, which ones are turning over slow, which ones
mhm,
are profitable. And that's
mhm.
it. It's very simple.
I see. So you kind of do that calculation based on how much existing inventory they have right
Yes,
now. In
correct.
Amazon only? What if they also have inventory in like a third party warehouse? Does that also
In
go into
Amazon
calculation?
plus their 3PL.
Or plus
Yes,
3PL?
we
Okay,
include the 3PL.
okay,
Yeah.
okay, okay. But anything else that's in production doesn't count. But you already
Yeah,
built it.
if it's in production, it doesn't count. But if they use AGL, the Amazon
Global
Global
logistics.
Logistics,
Yeah,
then as soon as it leaves the port, let's say in China, then
yeah.
it's in the Amazon system at that point. So we count it right then and there.
Oh,
We
you
try
do?
to yeah,
Okay,
we
to
try to
count
give the
everything.
seller yeah, we try to give the seller as much credit as possible.
Hmm, hmm. I see, I see.
Yeah.
And then the amount of money you lend is really based on how much, and you have a, I guess, a special calculation based on
It's
how
really
much
simple.
inventory. Mhm.
Yeah, it's really, we made it very, very simple. So since we're investing in the company, but we're not taking any equity, we're not owning the company. We just,
Mhm.
we're not lending to the company. So it enables us to do the things that we're able to do. Uh,
Mhm.
but by doing that, what we do is we look at your, what we call capital. And
Mhm.
capital is your inventory at cost
Mhm.
plus your receivable from Amazon. So let's say you
Mhm.
had $18,000 in inventory at cost
Mhm.
and you had a $2,000 receivable from Amazon. So you would
Mhm.
have $20,000 of capital. We
Mhm.
would we would match you. We would give you up to $20,000. We don't want to have more money in the business than you do. So
Mhm.
but as you grow, we'll grow with you. We'll give you more all the time. In
Mhm.
fact, I know
Mhm.
you mentioned that later on we're going to talk about a case study. I'm going to give you a success story that I think you're going to enjoy.
Oh, okay, okay. Thank you for sharing that. And I think your potential, I mean, your vehicle is so unique. Sometimes hard to wrap your head around it, because for my e-commerce brand, I have tried whole kind of option. I tried PayPal, Cabbage, what else? Regular bank loan, whole kinds of different financial options. But it's like um, usually they just charge you a percentage, and the
Yeah,
interest rate is sometimes ridiculously high. It's really really high actually. I
yeah,
remember when we took the cabbage loan a couple years
yeah.
ago, it was like 26 or 27%. It's more than almost as much as like paying a credit card if you look at some of the short term loan that like option that's out there.
Yeah,
And unfortunately, some of the business owner, because each of the business or the financial institution, sometimes they are not really upfront about some of the fee and
that's right.
costs. So that could be, that's a lot of hidden trap. It's like, oh, I signed up, I saw I'm only going to pay this much, but there's a whole bunch of other things that you need to pay when you
It's
get in.
unbelievable.
So
We see it all the time. Like, being finance professionals, we know what it costs in these other deals. We know it.
mm,
We see it, and we see how they're selling it, and they're definitely not explaining everything. What we do before we do a deal with anybody, we actually print out, I think it's 15 points of the most important things in our deal. And they're
mm,
written in plain English. And I know it's plain English, not written by a lawyer because I wrote it. So I know it's very
okay,
simple.
okay.
So,
Mhm,
and what we do is we get on a Zoom call with the seller and we go over each point in total detail, make sure everybody knows everything. There's never a question. So we don't have those problems. You know what? That's why we're the number one rated capital provider on Seller Central. We're number one. That's
mhm,
not number one in size. We're not
mhm,
number one in profitability. We're number one in seller satisfaction. How many sellers would refer us to their clients, their friends? How many sellers that we do business with love us? All of them.
mhm,
It's really amazing. Some of our competitors have none, and they're much, much, much bigger than us. So I
mhm.
assume they just don't want reviews. It has to be. Has to be. Has to be.
Yeah,
Yeah.
that's actually a very powerful statement, actually.
Yeah,
So,
let's stay with this for a second. So
sure,
can I give you an example of how our program works?
sure, please
All
do.
right, and this will give you a clear understanding of exactly what we earn and how it works for you, meaning any
Mhm,
seller. And I'm going to use that $20,000 example.
sure.
Let's say you have $20,000 of capital. Again, your inventory cost plus your receivable, and you're going to earn 10%. So you're going to earn $2,000.
Mhm,
Okay. And now we give you $20,000 and we take no profit for the first 30 days, by the way. But after that, I'm going to assume that your ROI will be basically the same. So another 10%. So now instead of you earning $2,000, you're going to earn $4,000. Okay. So now how does it get split up? Remember, you have 20,000, we have 20,000.
I
And
actually have this calculator pulled up on your
oh,
website. Maybe we can
wow.
use this for easier explanations. like it's like an ROI calculator. So can you
Yeah.
repeat the number that you're using so we can do a live calculation for the people that's
Yeah, this
watching?
is not going to
Uh,
give you that detail, but I was using $20,000 as seller
uh,
capital if you want to do
okay,
that,
okay.
and $20,000 as AccrueMe capital.
And for the people that's listening, you can also find this calculator by visiting accrueme.com, and there is a calculator on their homepage to do this calculation that we are illustrating right now for the people that's watching. But I know some of you will just be listening to the podcast that you couldn't see this calculator that we're showing right now. Please go to accrueme.com and you can find the calculator that we are showing right now. So
So,
continue.
so you see on the lifestyle withdrawal, just put it as 0 for this.
Okay.
And then let's see, the ROI at 10%.
Okay.
And turnover time, whatever. Yeah, leave it. What is that? 30 days?
20, right now it's at 25 days.
Yeah, 25, 30, whatever. It doesn't matter. 30 days is probably, a month.
Okay, I'll
So
change it to
that'll
30.
show
Yeah.
you how much, the seller will earn with us versus being on their own.
Okay.
So yeah, if you scroll over it, you'll be able to see the numbers. It's hard
Yeah,
for
I
me to
see.
see. I guess on their own, they
It's
would
kind
earn
of small. Yeah.
18,000, and with AccrueMe, they would earn
Make it
what,
bigger.
30,000.
Yeah. So based on this calculator, after 24 months, without a AccrueMe investment, they will earn about 18,000.
No,
With
30,000.
yeah, with the AccrueMe will be
Yes,
30,000. Without will be 18. Yeah.
right.
Yeah.
So that's just profit. But I want to go back to the other example because you know what? Scroll down for a minute if you don't mind, Jason.
Sure.
See the profit percentage?
Yeah.
If you can see over time, the profit percentage that AccrueMe earns goes down every month because the seller, our partner, earns so much more money. So every month it goes down just naturally and organically. But
I
let's
see.
go back to the example.
Okay.
Let's flip back and I'll finish the example and it'll make it clear for you.
Okay. Is there anything else you want to show on this calculator?
No, not right now. I haven't looked at this in a long, long, long time.
I just find it on your website. So,
Yeah.
uh,
So
yeah.
let me go back to the example. So
Mhm.
you have 20,000 in capital, you're earning 10%, so you earn 2,000. We give you 20,000. We earn no profit for 30 days. But then after that, I'm assuming 10% ROI as well. So now there's going to be 4,000. So you have $20,000 of capital, we have 20,000. So we're 50-50. So AccrueMe represents 50% of the capital. So whatever the percentage, this is a key number here, whatever percentage of the capital AccrueMe represents, in this case 50%, cut it in half. So we would earn 25% of the profit and the seller would earn 75% of the profit in that month. It adjusts every month. So let's go back to the numbers. Now on your own, you earn $2,000. With us, now there's 4,000. You're going to earn 75%, so 3,000, and AccrueMe earns 25%, 1,000. So what did the seller earn? They got the 2,000 they would have earned, plus half of the 2,000 they earned on us, 3,000. So the seller's profit went up by 50%, and the seller's ROI went up by 50%. Boom. Unbelievable. And now the next month, AccrueMe doesn't take its $1,000 out, so AccrueMe has 21,000, and the seller has 23,000. So now AccrueMe doesn't represent 50%; it's a smaller number. Again, you cut that in half. That would be what AccrueMe would earn that month. If the seller decided to make a payment to AccrueMe, AccrueMe would earn less because we'd have less capital, and half of our capital percentage is our profit percentage, and that's it. Once you get started with it, it's very, very simple. And it's really the way that lending should be done for sellers. It's not great for a lender, but it's great for the seller. Okay? So when you think about it, let me ask you one more question on this. So on your own, you earned $2,000. With AccrueMe, you earned $3,000, and AccrueMe earned $1,000. What did it cost you?
Nothing besides
Nothing.
yeah.
That's exactly right. That's the way this is set up, not to cost you anything. It doesn't, you don't take anything out of your pocket. I'll give you an example. A seller we just signed up. Today's Thursday. We just signed him up on maybe Tuesday, Monday or Tuesday. The very next day, he reaches out to us that Amazon suspended his account.
Oh no.
Oh no is right. Yeah, I feel terrible for the guy. But let's assume that his suspension goes on for a month. He won't make any money, right? He'll have no
Yeah.
profit. What will AccrueMe earn? Nothing. Zero.
Nothing.
What will he have to take out of his pocket? Nothing. So on that deal, he had an Amazon loan, which we paid off. So here we go. One day, we give him the money to pay off Amazon. Amazon is now paid. They got all their money. The next day, he is suspended for a patent infringement.
Mm.
So he's got an issue, and we're left holding the bag. But if he had the Amazon loan, he would have to still be taking money out of his pocket to pay Amazon every month.
Yeah, and with any other traditional lender, he still need to make the monthly payment. Doesn't matter whether or not
Absolutely.
the account is suspended.
Absolutely.
So,
Yeah. Pretty interesting.
I have a follow-up question with
Sure.
that. It sounds like it's mostly based on your current inventory that's in the Amazon warehouse and also in the 3PL warehouse. How does AccrueMe's financing options support the seller when they're about to launch a new product line or a new product? How does that
Great
calculation
question.
work?
Great question. We don't, but we don't want to take the risk on new products,
I
because we're
see.
taking
Okay.
that whole
Got it.
risk. So here's what we do. Let's say we were working with you and you decided you're going to use some of the money to start a new product. All good.
Yeah,
Start that product, but we don't get involved in it, and we don't earn any
I see.
money on that product
Okay,
until we see that it's profitable for 2 to 3 months.
I see.
Once it's
Okay.
profitable, then we'll include it.
hmm Okay, got it. Yeah,
Yeah, yeah,
I think
it's
that's
very
good. Yeah.
reasonable. Yeah,
And my follow-up question, my next question is, how do you even come up with this idea, and what was the motivation behind it? It's a very interesting
it,
setup that no one. It's
it
like
really
almost,
is.
yeah, it's very different than every other option that's out there in the market.
There's nothing else like it. There's nothing. Everybody's doing something similar to themselves, but nobody is doing anything like what we do. So here's what we did. Again, I was retired, so I sat down with my now current partner and an old friend. We already called some Amazon sellers to see what they needed. They all told us they needed good sources of capital. So we sat down over lunch and we said, okay, what do we want to do? And I said, I don't want to even be involved because, there's a lot of predatory lending in this industry, and I don't want to be
Yeah.
associated with it. I don't want anything to do with it.
Mhm.
And he said, well, why don't we do something different? I said, what do you mean? He goes, I don't know. Let's come up with something. So what I said is, let's think of ourselves as a seller. What would we want as a seller? So I literally was picturing myself in that, in my mind, sitting on the side of a desk as a seller. And I said, I don't want to pay. Let's make it crazy. I don't want to pay any interest, and I certainly don't want to pay any fees, because if there are fees, then I would assume you're going to be, screwing me somehow in the fees. So no interest,
Yeah.
no fees. I don't want to give up any equity in my business, and I don't want to make monthly payments when I have opportunities to grow. And we laughed, and we literally were sitting over lunch and we were laughing like, yeah, come on, who's going to do that? And I said, years ago, I used to have a program in the mortgage industry I used to call the Rich Uncle program, where you can go to your rich uncle and get a great
Rich
deal
Uncle
in the
program.
Rich Uncle program. So I
I
said to
like
him,
that name.
yeah, we're creating the Rich Uncle program for Amazon sellers. And so we came up with these parameters, and
Mhm.
my partner said, well, maybe instead of interest and all that, we could earn a percentage of profits. And I said, that's a great idea. Well, what percentage? And we came up with it that if we took whatever percentage we represent and cut it in half, then the seller could never lose, and we could win. We could be good. We could also lose, but it could be very, very good for us. If the sellers do well, then we'll do well. If the seller does poorly, we do poorly. If the seller doesn't make any money, we don't make any money. And we both. And then I went home that night, and I went into my office to create a spreadsheet from the seller's standpoint. Like, how did with this? And it was complicated, to do. And I haven't done it in 5 years. Remember. So I said to my wife, honey, I'm going to my office.
Yeah.
I'm going into Excel hell. And whatever I do, don't open the door. And so I went in, I created this pretty complicated spreadsheet to figure it all out. And I called my partner later that night and I said, you know what? This is unbelievably good for sellers. And it's good for us too. And that's how we started it.
I see. I see. Thank you for sharing that story. That's very, uh, it's very interesting. Like how sometimes, like us entrepreneurs, come up with new business idea, and
I agree.
yeah. So thank you for
And
sharing that story.
thank you, because nobody's ever asked me that question. That's
And
good.
I have also, I think you founded with a couple of your friends, and I guess you and your friend kind of thought of this idea together, or how do you convince your co-founder to even go with the idea?
So it was me and one partner, and then we had three other
Yeah.
partners. And I would say initially they didn't love the idea. Like they didn't see how we were going to make money. And we could put our money in other places that we know we're going to make money. And this was a bit of a gamble on our part. And but we convinced them that this is a huge industry. We have a game-changing program here. It's life-changing for sellers. We can really make a difference. And once sellers start to understand it, it will take off like wildfire. And that's exactly what's happening. It took a couple of years for people to hear it a few times and see it at conferences to really understand what we're doing. But now all of our competitors are referring business to us. I go to conferences, people in other booths walk sellers over to our booth to say, this is who you should do business with. And it's really, we at the last Helium 10 conference that we went to in September, at least a dozen people came by our booth just for one thing only, to say, I know all about you guys, and this is brilliant. I'm dead serious. I heard brilliant from at least a dozen people that came by our booth. And we love that. It's nice.
Yeah, that's actually say a lot for the people that's also referring you business as well.
It's fantastic. I had two guys from Israel come by our booth at another conference, and the guys came by multiple times. And towards the end of the second day, this was at Prosper this past year, they came over to the booth again, and they go, who came up with this idea? And I said, I did. And they go, this is brilliant. I want to invest not 6 figures, but 7 figures in your business. And then he points his finger. But the next time you have a business, I want you to call me first.
I love that story. I love that story.
It was nice. It was very nice. Cute.
So did he actually end up investing?
No, I never took his card. I never followed up. Yeah, I didn't have his card.
Okay, I see.
I was busy with a lot of people were talking to us, and he just chimes in and with all of this, and then I thought I had his card, but I don't.
I see. So currently, how many Amazon businesses have you helped and are currently supporting with the program?
We don't announce numbers, but we're just under 1,000 is where we are.
I see.
Yeah.
I see.
Yeah.
So
we're still young. We're doing this for 3.5 years. And what I love is our very first client. We had no technology. We didn't have an agreement. We had nothing. And our very first client, they needed the money. And they were a retired couple that were trying to build the business and get their retirement back because they lost their retirement. And they needed the money to do it. And they found us, and they took our program to their son-in-law, who's a big shot on Wall Street. And he said, definitely do it, number one. And number two, ask them if they'll give me money too, is what he said.
What
Yeah. But they
uh,
in 1 year increased the size of their business. I think it was tenfold.
whoa,
So yeah,
impressive.
10x the
Okay.
business. And then the next year, like fivefold. It was something along those lines. And they're
Mm.
still with us. It's three and a
Oh,
half
nice.
years. Yeah, we
Mm.
love them. They're just wonderful, wonderful people. And
I see. I see.
yeah, it's
Yeah.
great.
So that actually is kind of lead to my final question. Is like any
Uh,
other customer success story that you want to share?
I do, and thank you for
Mm,
that. There are so many. So just so you know, we do business. Most of our sellers are private label. We
mhm,
have a good amount of wholesale and some retail arbitrage, and we have success stories in all areas. But I'm going to tell you one, just because I love the story. Young guy, 22 years old, and he's doing wholesale. And
mhm,
he came to us last December. And December, we all know, is a great month, right? And
mhm.
well, his profit in December was $1,500. All right,
Okay.
not a big number.
Yeah.
And in January, we started with him. We gave him 25,000.
Mhm,
He deployed it right away in products that were turning over very fast. So he was
yeah.
building very fast. In February, we gave him more. Then we gave him more in March. By
Mhm,
May, his profit was $44,000.
mhm.
By
Oh, okay.
July,
Okay.
yeah, by July, his profit was $56,000. So
Mhm,
I called him and I said, "So what are you doing? How are you growing so fast?" He said, "Don, I'm
mhm,
doing exactly what you told me to do. Eliminate all the other stuff out of my life." So he goes, "So I got rid of my, beautiful house. I didn't need it. I got rid of the fancy car." And this kid was 22 years old, by the way. He's
mm,
23. He's 23 now. I got rid of the
mhm,
fancy car, just like you said, and I replaced it with a truck. So, being in wholesale, he can now go to the distributors and suppliers and pick up product if he needs. Uh, and he said his girlfriend and him live in the warehouse, his warehouse,
mhm,
and we're 100% focused on the business. And
mhm,
he goes, "I want to be a millionaire and I don't want to
mhm.
stop." So he went from last December earning $1,500 a month. And this December, his profit is going to be somewhere between 70 and $100,000.
Oh, congratulations. That's definitely
Isn't
a
that
huge,
fantastic?
yeah. Yeah. Yeah,
It's
that's definitely
fantastic.
a huge push.
Yeah. We have so many stories like that, but taking somebody that's 22 years old and helping them with that kind of success. Now, obviously, he took our money and our model, which is perfect
Mhm,
for this, but he's the one that did all the work. He's the one
mhm,
that has all the knowledge and put it to work. And he's the one that had the desire to go out and make it happen. And
mhm.
so it's a great combination. And now he just came back to us, I think early this week, for another 100 or 150,000. And at the same time, one of my guys told me, he asked this question. He goes, "All right, well, in a few months, I'm going to need $1 million. Will you support me
Okay.
with that?" And of course we would.
Uh-huh.
How amazing is that? He's going to
Mhm,
go from having a very small business with very little profits to having a very large business with very large profits. And next
mhm,
year, he's not going to stop. It's going to keep going. It's
mhm.
exciting. I love it. It's life changing.
I see. So you also support wholesale business, not just private label, but majority of the your client is private label.
Yeah, oh yeah. Most of them are private
Okay,
label, and
I
then
see.
probably about 70% are private label, and maybe
Mhm,
25% wholesale and 5% retail arbitrage.
I
And
see.
even retail
And
arbitrage, you'd be surprised. Most lenders won't touch retail arbitrage, but
yeah, actually, 100 usually no one touching
we
video
love
arbitrage
them. We
people.
love them.
So
They're great.
I see.
They work
Yeah.
hard. They work really hard. So this
Mhm,
one retail arbitrage guy, he started with us. His profit was $2,500 in
yeah.
his first month, a little over a year. So it was like the 13th month. His
Mhm,
profit was 44,000, and
mhm,
going up from there. So he was like, between
mhm.
39 and $48,000 the next few months. And then he
Yeah.
called me and he said, "Look, I'm I want to expand into wholesale." So
Mm-hmm.
we introduced him to a distributor, and he started his wholesale business. So now he's got retail arbitrage and
Mm-hmm.
wholesale. He's making a lot of money in both. And at the end
Mm-hmm.
of this year, he's going to be, after the end of this year, he's going to be launching his first private label product.
Oh, nice, nice,
Yeah,
nice. That's a good transition. So,
he's got a ton of money now,
mhm.
and he's got all
that's
the knowledge.
that's also kind of how I started back in 2016. I was actually doing retail arbitrage, selling used textbook for a year. That's how I got my
Wow.
initial capital.
Well, that's so
So,
smart,
yeah.
and it takes a lot of effort and a lot of work. But that's
Mhm.
what good business owners do. They put their heads down and they go. They're not afraid to go out and work.
Yeah,
I give you
so
a lot of credit.
yes. Oh, thank you. So, as well, wrapping up the show today, just to recap, in order to qualify for AccrueMe, you need to be selling on Amazon.com and doing minimum, do you say 10,000 a month for
Yeah, yeah. So we'll give them $10,000 is our minimum amount that we'll give. So they're probably selling, $25,000 a month,
25,000? That's kind of
somewhere in
the
there.
revenue
Yeah,
minimum that people should
yeah,
consider. Okay, got it, got it, got it. Okay,
somewhere in there.
and so where can people find you? I post your website on the chat, but beside the website, any other place people can find you at?
Sure. At AccrueMe.com. And if anybody wants to connect with me personally, I'm one of those people that I communicate with people. So if I can help you, even if it's not with AccrueMe, I will help you. If there's questions to be answered, just ask me anything. And find me on LinkedIn under my full name, Donald, as if my mother was calling me for dinner. So Donald Henig, Henig, and that's it. And we'll take care of you.
Okay, sounds good. Thank you so
Yeah,
much for being on our
thank
show,
you.
and thank you for sharing your wonderful stories on how you get this business started. And wish you for all the success for the year to come. And I think we'll also see each other in a lot of other trade show in the future,
I,
since I
I
also
think
go
so
to quite a
too.
few. So yeah,
I think
but
so too. You're a good guy. You have a good business, and I appreciate you inviting me on. That was very nice of you. Thank